Hello to all the debt warriors listening, and welcome back to another episode of Millennial Debt Domination. I'm your host, Katie Fada. An IRS account allows you to access your tax records, make payments, view certain notices, and more. An IRS account is a must-have tool for taxpayers, but especially small business owners. An IRS account only takes a few minutes to create and makes it easy to access your tax records online. Today, I'll be joined by Claudia Moncarz. Claudia is a tax advisor to domestic and foreign clients investing or conducting business in the U.S. She's also a partner at Moncarz Law Firm. Claudia and I will be discussing accessing your IRS account, preventing an IRS audit, cryptocurrency, and much more. Now let's get to my interview with Claudia. Hi, Claudia. Thanks for being on the podcast today.
Hi, thank you for having me and giving me the opportunity to speak to your listeners.
Yeah, I'm looking forward to having you on today and talking about the IRS accounts. So to get started, for all our listeners who might not know, what is an IRS account?
Well, an IRS account is similar to your credit history, right? So you know how we have My FICO, and you can kind of check what goes in your credit score? The same concept applies to the IRS. You, me, and everyone that's listening, they have an IRS records, right? They have their transcripts records, and everything the IRS they do to your account that goes along with your social security number or your EIN if you're a company, that goes into that transcript. If they pull your transcript, if you pull your tax returns to see if they want to audit it, there'll be a letter code and that will go in there. If they're going to send you a letter, they'll put a little code in there that they're going to send you a letter, and then you'll get the letter 2 to 3 weeks later.
Okay, so where can someone access their IRS account?
Well, you can go to www.irs.gov, and they have a portal. You sign up for a portal, and then you can pull your records. You can see the changes that they made unless you're monitoring on a daily basis. You can do that, I guess. Go check if they made any changes on a daily basis. You can pull the records from the IRS account.
Okay, so irs.gov. I'll make sure to put that link in the description of this podcast so everyone can get that there as well. Well, how often should you be checking your IRS account, and why is it important to check it?
It depends. If you're concerned that you are, if you owe money to the IRS, if you owe taxes, then you should be checking it to see, because if you check it, then you'll be able to see if they're about to send you a letter for a levy, for a lien, if they're going to file a lien. They're going to send you a letter that they are going to revoke your passport, anything like that. They have to send you a letter before the IRS. So like I said, it'll go into your transcript that day, and then you have like a 2 to 3 weeks lag time before you actually get it. If you, we actually do offer that service to our clients where we check their transcripts on a daily basis, and we just pull their transcripts and we let you know, because it would be really hard otherwise. And if you're in trouble with the IRS, obviously you don't want to call them just until you have a game plan. The other way, if you're just on your own, I guess, if you don't necessarily have anything else and you're just not concerned about anything else, then you can check about maybe once every quarter just to make sure everything's good. If you're concerned, I mean, you just go check your records if you think there's anything in there that you should be concerned about.
Kind of similar to your, it's kind of similar to like a credit report, where it's important to check to make sure there's nothing new or any concerns or anything, right?
Correct. And sometimes even like I had a client that they don't live here, they live abroad, but they still report, because they're U.S. citizens, they report their income, and they didn't report something, so the IRS changed the return. But because the IRS had no address, they never got that address, so they never paid. So then they end up paying a lot of interest and penalties on something that they could taken care right away if they were here. So yeah, especially also if you move, things like that, similar to a credit report.
So how can you manage your IRS account?
It's not necessarily managing, but it's just checking it. Just like I say, you can pull your transcripts, which is your records per year. And then the other thing is that when you're about to do your return, there's something called a wages and income statement, where it's the IRS, it has all the information the IRS has on you. So a way that people usually get audited or triggers an audit is because you didn't report something. You report a distribution you took from your IRA, or you didn't report if you're a freelancing, you didn't report a job just because you forgot, not on purpose. And then the IRS then has a record that that was reported, but you didn't report it, and then you get audited. So that's the easiest way to avoid that, because if you're going to do your tax return, you just look at your records, and you can get those in IRS Account too, and you just see, oh, this is what I need to make sure that just to double check what you had that you report in your tax return.
Should millennials and Gen Zers be managing their IRS accounts? And if so, why is that important?
Yes, you should manage, just like you manage your credit report. You want to know what's going on. You want to know what's going on in your records with the IRS. And like you said, sometimes, especially when we're younger, we move around a lot, and we may not necessarily have updated our records with the IRS. They get updated every time we file a tax return. But if there's a lag period in between that, they may have sent you a letter that they did a change to your return, and you have 30 days to answer. You didn't answer it. That was how you have interest and penalties. And that's just because you were not kind of like checking what's going on in there.
Maybe like get into the habit of checking young too. So then that habit stays with you as well. So how can you deal with an unexpected tax bill?
Well, if you had an unexpected tax bill, there's different things that you can do, right? There's two ways that they come. Either one, at the end of the year, if you're like you own your own business, you're an entrepreneur, or you're a freelancer, you may still have your job, but you're doing something on the side, like a side gig. Sometimes we don't plan for, or especially at the beginning, you don't end up planning for the extra income you had. And then you kind of like when you do your tax returns, you realize, oops, I owe a lot of money. And that's an unexpected tax bill. Other times is kind of like what we talked about before. We forgot to report certain income, and then the IRS said, no, you had to report this. So therefore now you owe an additional taxes plus interest and penalties, right? So the biggest thing is that you should not ignore the IRS. That is the biggest thing, the biggest mistake a lot of people do. They just pretend that letter that was in there and then just put it away. That's not the answer. You do have to do something about your tax debt. Even if you say you see a tax return and you realize that you're going to owe money in your tax return, you still file the tax returns, because there's penalties not only for not paying, but for not filing on time. So if you ran out of the extension time, just file your tax return and then get in a payment plan. There's always ways to fix the unexpected tax bills.
Why is it important to have good records and understand your right as a taxpayer to prevent and navigate audits?
Well, going back to holders, if you kind of know taxes, even though I guess the way they're written is very complicated, it seems complicated, but they're somewhat simple. And the whole key to everything, to an audit, to not having to pay extra taxes or anything like that, is just to have good records. Because when you have good records, and good records doesn't mean I throw all my receipts in a box. I guess that's better than nothing. But nowadays we have apps to calculate your mileage. We have an app to, like, you can take a picture of your receipt and then you can upload it. I mean, there's an app for everything. And now with so many easy type of accounting systems, it really should keep your records. And the reason for it is that if you get audited, because the IRS does make a lot of mistakes, that way you can show them. You can show them that you're okay, and then your audit is easy. Or maybe because your tax return there was something that didn't make sense, that's why you were audited, and you can explain it. And then when it's time to do your return, it's so much easier for you, and your accountant can help you find all the right deductions when you have good records.
So having good records can prevent audits. Is there any other ways that people can prevent an IRS audit?
Yes, having good records can prevent audits. Also making sure that you, like I said, the most common reasons for an audit are, one, people don't report all their income. And once more, it's not on purpose. I've been practicing for 20 years, and I think I only had one client when he purposely was avoiding paying the IRS. Everybody else makes a mistake. Like you said, sometimes if you want to double check, pull your wages and income statements. The other way to avoid an audit is make sure that you know the deductions properly. If you have, for instance, people that have a side gig or a side hustle, one of the ways that they get in trouble with the audit is that if they make it seem that it is not you have to make sure that it doesn't look like a hobby business. For instance, people that they're trying to grow a business, and maybe they go to a lot of conferences and things like that to learn how to grow their business or a side hustle, that sometimes can look like a hobby. So you have to keep, once more, good records of all the travel that you did,
Right.
so that way you avoid the audit for those things. So they kind of go hand in hand.
How does someone end up in IRS debt?
It kind of becomes really easy if you don't plan for it. And going back to those unexpected bills, they're really not unexpected. If you're in business, and this usually happens at the beginning of your business. If you're in business, then and if you have up and down income, then put away some of the money. If you get paid commissions, ideally you should have yourself in salary on that. But if that's not an option, then just take 10% of that and send it to the IRS. You can put it in a bank account, but be honest with yourself. If you know that you're gonna go touch a bank account for when income is low, then just send it to the IRS, send 10%. And prepay, because we all have to do estimated taxes. We have to prepay our taxes basically. And do the same thing just every quarter, kind of like, every quarter, make an appointment with yourself and just have that one, you call it your tax day. And that day you can go check your IRS records, see if there's anything funky out there that you need to deal with. And then also look at your expenses, at your records, at your actual fiscal receipts and all that, or in your app. Are they in order? Are you kind of like do a rough calculation? Did I make a profit this quarter? Should I then send some estimated taxes to the IRS? And kind of like, if you get in the habit of doing that every quarter, then you will not end up being in debt. Because people mostly get in debt for two reasons. Either A, a life event happened, a tragic, either somebody got sick, divorced, something like that, and they got disorganized, or B, they are disorganized in their business. And it is easy to be, because running a business, especially at the beginning, it is hard, that you just kind of like get in trouble in this area. But if you kind of like have a meeting with yourself, like I said, every quarter, and then look at your taxes, you will get in the habit, and then you will avoid this kind of issues.
Right. And obviously, like everything, it can be hard for people to get into the habit of things. So if someone is like they haven't adopted this habit yet and they find themselves indebted to the IRS, what are some strategies they can use to help their situation?
Well, there's many. The first thing to do is that you really have to go and just kind of like sit down and kind of go through with see what are your expenses and what is your income, right? And then there is the IRS has what they call reasonable deductions, what they think which is not reasonable at all, but they think it is. But you kind of have to try to see if you fit into their budget. And if that's why, so you do a calculation, how much you made that month, how much your expenses, what you have left. Is that something that you're going to be? And then technically that's all you're supposed to do it with the IRS. Give them all that. So you have to like look, so do I have anything extra? So if you have extra, then maybe you can get into payment plans. You can try to offer to negotiate for less. You can, if you really don't have anything left, then there's something called currently not collectible, and they can try not to pay, and you can have it so that they freeze your account for a year or two. So there's many different solutions. And one solution is even looking at your tax return. Maybe it was an error in it and it needs to be amended. There's probably like at least a dozen solutions that can be done. But like I said, the most important thing is not to ignore it. And kind of like forgive yourself, because we all make mistakes. We all make money mistakes. We all make tax mistakes. I made myself tax related mistakes. So it happens. It's normal.
Yeah. And, you mentioned earlier that quarterly check-ins and having good records can prevent you from being ending up in IRS debt. So are there any other ways someone can prevent themselves from ending up in IRS debt?
Having a good accountant and a good advisor, I think that's very important too. We can do our own taxes, especially if we are simple, just we have a job and a W-2 and that's it, pretty much. We own a house, and that's kind of, I think, is easy. But once you get into, if you have any investments, or you have any side gigs, or you actually have a business, or you have even rental income, I think it's good to have a good, not just anybody that prepares returns, but a good accountant that can give you tax advice.
You also mentioned earlier that people ignore the IRS. Well, why would someone ignore the IRS? Why do people take this approach?
I get it. I mean, getting letters from the IRS is scary, especially if you have financial problems. It's best to just pretend they're not there. But like I said, you just have to remember there's many. I think it is on average, they open about 7 million cases a year. And that's before they had new cases per year of collections, the IRS. And that's before they had all this new staff coming in. So it happens. People cannot pay, people forget. But the worst thing to do is to ignore it, because then they're gonna escalate. They have a process, right? The IRS, and everything's written. And the whole thing is that first they're gonna send you a letter, then they're gonna send you a second letter. Then after that, they're gonna send you another letter telling you they're gonna put a lien. Then comes a letter about a levy, and they're just gonna keep getting worse until they get your attention. Because the whole point of the collection department is to get your attention, to get you to get you into a payment plan, or to get you to pay in full.
So
That's all.
basically, yeah, you can't ignore it.
No, and you have to remember, yes, the IRS is a government agency, but they're the biggest collection agency in the US.
Basically, yeah. So you can't ignore it. They're going to fine you anyway, and you're going to have to pay. So it's not the best approach to take.
Yeah, and I once time somebody told me that another accountant, I never seen any of my clients do that, but I know some people, what they try to do is that they change their address. So they'll put in address this year, and then they change it next year, and then they avoid the IRS getting the letters or getting them any notices. But it's in your records, so even though it's not in there, that you're just making it worse. So that's not a strategy.
I want to talk about cryptocurrency. Can we talk about what it is, and is it difficult for the IRS to manage?
Yes. So even though we don't hear it as much, I think in the news, but it's still out there. And it's another form of currency. People use it, and it's just not. There's NFT. There's in what the IRS calls it is digital assets, because the way they see it, because it's not just cryptocurrency, and like you and I think the average person thinks of like, okay, I have crypto, so it's like cash to them, a dollar for dollar. But that's not how the IRS actually looks at it, or any of the digital assets, and that's why they expanded to that. They look at it more like stocks. And so if you buy stocks from Apple today and then you sell it tomorrow for profit, and the average person knows that they have to pay taxes on the gain. But we don't have that same analogy when it comes to crypto. And I think that's where the error happens, that people, I think everyday people think of it as cash as opposed to think of it as a stock. And yes, it was hard for the IRS, and it's still a little bit hard for the IRS to manage it. But the IRS, a couple of years ago, where they got a lot of funding, it was not only to bring new agents to manage all the collection cases, but also a big part of it was to update their systems, their algorithms, and their computer for digital assets. That's something that they know that there's a lot of money out there that they're not getting tapped into. And they do have a lot of the work is done through algorithms and computers. They can figure out, I don't know all their algorithms, but they can figure out when you have all the things. And some of the banks and some of the currency exchange, they are, especially here in the US, they're required to report all those transactions, just like stocks get reported. They are required to report that.
What is their perspective and their approach to cryptocurrency? Like, how do they feel about it?
Well, yeah, like I said, that's an untapped market for them, where they know they're losing, they're not collecting the revenue because they know people are not reporting it. And once more, I don't think people are not reporting it on purpose. I mean, there may be some people that are not reporting it that they don't want to, but because they see it as cash. So if they exchange from Bitcoin to, that is technically that's not that they did dollar for dollar. That is that there was a difference. Like if they change Apple for Starbucks stock, and they will see it that way. So that's what they're trying to, in the past year or two, they've been trying to educate people. I don't think necessarily educate the public, but they've been educating themselves in fixing their systems so that they can capture people that are not reporting their cryptocurrency gains.
Claudia, thank you so much for joining me on the podcast today. Before we go, do you want to tell my listeners a little bit about what you do?
So I am, first of all, thank you for listening to me. I love being able to give this information because I know it's not easily available out there. Right. Especially for me, that I joke that I'm certified tax geek. I admit what I do. I really like taxes.
Yeah.
And if you have any questions, you can go to our website, moncarzlaw.com, MONCARZ law.com. Or we also, like I said, kind of I mentioned that we do give that service, monitor our clients' daily transcript, because it is a headache to go in there yourself, and sometimes you don't even know what those little codes mean. And you can go to mytaxalarm.com and for that service, and we let you know if anything hits your transcript.
Great. And I will include both of those links in the description of this podcast so you guys can get that all there. But Claudia, thank you so much for joining me on the podcast today. I really enjoyed talking about the IRS.
Thank you.
Navigating your IRS account may seem difficult, but it doesn't have to be. I think Claudia did a great job explaining how you can navigate your IRS account. That unexpected tax bill isn't necessarily unexpected. Don't avoid your IRS debt because there's no avoiding it. You will have to pay your debt, so if you can't pay your debt, there are payment plans available to make your debt payments easier. Don't forget to include your digital aspects in your IRS account as well. With that being said, that wraps up another episode of Millennial Debt Domination. Don't forget to subscribe to the podcast wherever you're listening. And if you're listening on Apple Podcasts or Spotify, please rate and review us there. I'll talk to you next time, Millennials, Gen Zers, and everyone else listening. Bye.